Welcome back to the Wealth Guide podcast. In this follow-up episode, we continue our discussion with Peter White, Managing Director of the FBAA. This time, we'll delve into the educational initiatives that Peter is most proud of within the FBAA and how these programs are preparing brokers to meet the demands of the modern finance industry. We'll also explore the lessons Peter has learned from navigating economic cycles, the technological innovations shaping the future of mortgage broking, and the importance of fostering a strong sense of community among FBAA members. This is an insightful conversation for anyone interested in the future of finance and the crucial role of brokers in today's market. So without any further ado, let's dive into today's episode. Peter, thank you. Welcome back to part 2 of the podcast. Now, as a member of the Education Committee at the FBAA, what initiatives are you most proud of?
Yeah, look, education's always an interesting challenge, to be honest with you. But we've taken the focus, and I have hated our industry's diploma since I first saw it. I've always thought it was so underdone, it wasn't funny. At some stages, people were doing it over a weekend. I said, you do a diploma in a weekend, it's not a diploma, that's a cornflake box, right? Although I've complained about for a long time, we weren't able to get much traction to do anything with it until this year. So we have now recomposed the diploma and called it a diploma with a difference. And it's a combination of all of the RTOs and ASQA, IPSA, whoever the governing body is these days, their requirements and obligations for the diploma. And then we've added a whole lot of practical learnings from other people into it as well. And what we've done is said, okay, well, this is the diploma with a difference. It's all the core competencies and a ton load more. Right? And what you can do when you come to our professional development days, which we call our Broker Elevate series, at the end of that, or a part of that, you'll actually be able to undertake a workshop to actually do some of that as you go. So you don't have to go and sit and study on your own or anything like that. We're actually bringing workshops into our PD days. People can actually sit there and start and work on them and do them. They are not necessarily in order of to what the course contents really is, but they all fit straight back in. So they just slot back in. So I've done that. I don't have to do it anymore. And so I think it's really important that when we put ourselves out in the marketplace and say we're professionals of what we do, we make sure our education backs it, right? And to me, I've spoken for many, many years about we support the Cert 4 position. We're not going to enforce a diploma, and we're still not going to enforce a diploma. And I'll give you some other data behind that in a sec. Because to me, the most important thing was having a strong foundation of knowledge. Without that, I don't care what you build on it, it's going to crumble. You're going to be crap and fall over, right? Your foundations have to be right. For us, the foundations is Cert 4, right? Get that done. Go hone your skills. That's why other industries have apprentices. You do a bit of teaching and a bit of education along the way, get some learnings, you go and practice your skills. Same thing, right? So we've sort of taken that approach for a long time, but I've always hated the diploma. So now we've got that sorted in my mind. We're now in the throes of rolling that out and allowing people to be able to do that in a more convenient manner, but also have a lot more competencies that are built into it that actually make sense for what should be a diploma. And it's not something you can do in 1 hour or 2 hours or over a weekend. It has a proper timeline to it. The other piece that we've had a strong focus on, it's taken us a while to get together because it's very complex, but we've created a career pathway for commercial and asset finance. And it's a journey, as my chief development officer would like to call it. You bring them in from the front, French to the front door, and take them through the house, sort of thing. But again, it's getting the foundations right. But it's the course is what we call an advanced certificate in commercial and asset finance, and it helps people to understand all the key factors with the leading specialists and RTOs that are in that sector to be able to educate people on the best outcomes. And it is actually a career path. So we're doing other things in that journey as well that we'll launch early in the new year that expands upon that. And also too, the thing with education always, I guess, concerns me a bit. It's got to be affordable. People are doing components out of our courses as a part of coming to a PD day. Other parts of it they will pay for, but you're talking maybe $100 here or all up. Once you do the whole diploma, I think I probably shouldn't put a figure on it, but it's certainly not an extravagant sum. The advanced certificate for commercial and asset, some courses out there are like $10,000. I said, that doesn't make sense. And admittedly, this is a complex course. It costs a couple of grand to do it or thereabouts. But that makes a lot more sense to me than other things. But they're important skill sets, especially when you dive into commercial and asset, because they're not just out of the box home loans. And I'm not putting home loans down, but they are fairly generic. commercial and asset has a strong influence by the person's business. So you really need to understand your client's business, what that is, how that plays out, what are the key things that impact them. So if you're talking developers, you're looking at pre-sales, you're talking to restaurants, you're talking about bums on seats. There's a whole host of different metrics as they look at to say, this is my business, how it justifies, and et cetera. So you actually need to understand the business as well. If you're going to be really good at helping a business person or somebody who's got commercial properties or a developer out in organising their finance. Important that the knowledge is right. So it's got to be the best quality you can get, and it's got to be done at an affordable price. And that's what we focus on.
Yeah, look, I think that's super important as well as a financial service professional, is that you're educated as well. Like you said, you don't want a sort of overnight or over weekend professional. You want to ensure that your financial service professional is educated as well. And even in the financial planning circles where we are kept to higher education standards as well. And I really feel that that is something to give your financial service professional confidence in as well. So when people go to see a mortgage broker, especially, that you have the confidence that they are accredited. Education. I use an acronym called the 3 E's: education, exposure, and experience. And a lot of those initiatives that you described, they touch on at least one of those 3 E's as well, to ensure that they are competent, that they know what's going on, that they are across the ever-revolving, landscape of mortgage broking as well. How do you feel that these initiatives in particular address the ever-evolving landscape of financial mortgage broking?
Yeah, so I guess mortgage broking evolves and changes, but the underlying methodologies of lending hasn't for a long time. So I started in the 70s with my lending career. The underlying foundations or the principles of lending still the same today. Yeah, it's hard to change. So that's a good thing. Consistency is a good thing, I always say. And, broking has grown and evolved and changed. And I think that's a part of the adaptation for the future of broking, to understand where you fit into that puzzle, what it is you want to do or specialise in, and how you're going to approach that and develop a marketplace that gives you business and provide value in what you're doing. And so there's a bit of, I think, a unique play at the moment, because we're at that precipice of early days of technological growth that will play a huge part as we go forward. I don't believe it's quite there yet, but it's touching everything. Right? It's got more to do, but more to do in a positive way, by the way, for brokers around the country. A lot of people get spooked about it and say, talk about AI. And it's nothing to be spooked about in my mind. It's there to do your grunt work, to speed up your processes whilst you interface with the borrower. Now, in 100 years from now, I certainly won't be here. I won't be in 50 years from now. That market, or that landscape could change quite a bit. But technology is a very interesting play at the moment. It will be a very important piece as that future of our marketplaces grow and we evolve into it. And it will change the dynamics of things. So what we do today, we won't do in the future. We'll do it. The fundamental, as I said, doesn't change, but it'll be done in a different manner. You can't escape that. You look at the mobile phone. The first mobile phone I had a car battery and a brick on the top, right? Yeah. It's a shocking thing. And today, we all walk around with these things in our pockets with huge computing power and so on and so forth. So you think about the evolution of those sort of changes, and now we've got the new iPhones out this week, or available from the end of this week. Not that I know that.
Yeah.
With a pre-order, and with Google phones and stuff, they're all driven by AI. Right? They've got all these built-in tech. So imagine where that'll be in another 5 years.
Yeah.
So we just got to embrace it and be smart about it and understand where our footprint is, and to make sure we be true to self as we go forward and embrace what's coming.
I think the key thing with the AI or any of the part of the technology is really it helps you do the grunt work, like Pete said, but also sort of optimize the service that you provide to the clients.
Yeah.
But ultimately, it's all about sitting down face to face with a client, building that rapport, because you need to have that rapport. But that doesn't take that away at all.
No. And it won't for a very long time. Yeah. There's a future that probably says it probably does, but it's not in our lifetime sort of things. No. But getting that grunt work and doing it right. One of the industry issues at a regulatory piece is all about digital signatures as opposed to wedding signatures. We should be in a climate today where digital signatures are just the norm. But if you try and settle a loan, there's only a couple of lenders that you can do that with. Or maybe only even one. And we need to make sure that path and that journey isn't interrupted by banks' bad behaviours in trying to pinch deals 24 hours from settlement. How do you do that? Drive it by technology. Yeah. No human intervention. Through it goes and we're done. That's the answer.
In your experience, has the dynamic changed in terms of a partnership level, say the partnership between a mortgage broker and a financial planner at all?
I don't think it's evolved to where it should have. I think there's a great symbiotic relationship that needs to continue to evolve. And we're doing our piece and a part of that. I won't talk about other associations, but we've got an alignment with a group in the fin planning world to say, well, we need to align this better. And it's something that, I look back with my history, so even with the broking businesses I've had. So we used to do that. Why aren't we doing it now? What's happened? What's changed? And I think we went through periods where we were so busy in the 2000 era until we hit the GFC and everything fell apart. We all cried in our soup forever and a day. Yeah, things sort of grow, and then they grow not too big, but they grow so big that I don't need you, not being disrespectful, to when it hits a brick wall and you go, I really do need that person. So I got to rebuild that relationship. I think there's always something that sort of gets in the way. But I think the important thing is that we build those relationships, because there is a symbiotic piece there. So brokers do not give advice. You give advice as a planner, right? So there's a piece of the puzzle that the broker can't fill. He's not licensed to give advice. He's licensed to provide credit assistance. Very different thing. From our point of view, a good thing, but it is different. So there's a relationship that says, well, this makes sense. Let that person give advice. They hold that license. They're qualified to do that, et cetera, et cetera. They know that. They've got the experience, the ease, right? Broker doesn't. So therefore, if we work together, then each specialises in their fields and provides the best outcome for the borrower.
Yeah.
But not only that, it's a great client value proposition from a broker's perspective. Ultimately, what you're doing is putting, like in the previous podcast that we've spoken about, putting client at the centre of everything, and then working out what client's goals and objectives are and how can we help best meet them. Yeah. Because that client has a super, they have insurances, they will have need for further wealth part of the growth. They are going to buy a property. They want to minimise taxes to the property if they wanted to do that. So those needs still needs to be addressed. And if the broker was to provide that within that in-house circle, it's such a good value add for the end consumer. And
I wanted to ask as well, in your opinion, same question, but opposite side of the fence. I know you've been in the financial service industry, financial planning industry for a while now. Yeah. How have you seen that partnership in general between a mortgage broker and a financial? Has it strengthened as people see the value in that relationship?
Absolutely. I mean, from a financial planning perspective, I can't call myself a holistic advisor when I'm tiptoeing around the credit part of the advice, because I can't give credit advice. Now, I can clearly see the client's got about $1 million in loan. He's paying about 1% extra on there. And if he saves about 1% on that $1 million loan, it's automatic a $10,000 saving. Now, that can go towards all the other ancillary needs around tax savings, super, insurance, whatever the structure would be. This is where we sort of engage that relationship to go, Joe, can you please have a look at this structure and provide us a bit of a help? So absolutely, it's both back and forth.
And Peter, I wanted to ask you as well, look, you've seen a fair few economic ups and downs from your experience. What key lessons do you think you've learned from them, if any?
It always turns around.
Does a full circle.
And don't get me wrong, it does. Yeah, I've seen that many booms and busts, if you like, and then we hit the GFC and all of that throughout. We've got through them all. Australia is very resilient. And you won't hear me say this very often, thanks to a strong banking sector. Now we'll move on. That's in one clip. But it was because, and we have a strong banking sector. That makes us very resilient to these sorts of things. Australia is the lucky country from that point of view. And I think it is important that people understand that it's not a forever situation, regardless of how good, bad or indifferent it is. It will always cycle and change. And it was the same thing in the last 10 years, whatever it was, when we had the lowest interest rates ever, right? It was never going to last. I grew up, my first home loan I ever wrote within a bank was at 18.5%. That won't ever come back. It was a different era and different cost of funds. But, home loan interest rates probably should be around 6 to 7% for long-term economic sustainability of a marketplace. That's probably where it needs to land. It's my view that is where it needs to land. It's an interesting play with that, and people just need to chill. Right, let's not get too extreme about this. I don't know about calls for government interfering with federal reserves. So the Federal Reserve banks all around the world sit independent of government all around the world for a very good reason. Kind of think that's probably where it needs to land.
I feel a lot of people are, they're blaming the RBA for whatever. But at the end of the day, I feel that the RBA only have one tool at their disposal. Yeah. Whereas the government have a myriad of tools available. They can play with the budget, tax system, whichever.
But we've got to realise, though, the 0.1% cash rate is unrealistic. This is my concern, that people are living in the past thinking that's the reality, because when they got a loan, that's all there was.
Yeah.
You go back 4 decades, very different landscape.
Yeah.
This was a moment in time. It was never going to last. I got called by a senior minister of the day that I was scaremongering, saying that rates were going up. 2 months later, they started that journey.
Yeah.
Right? But we've got to get to something that is long-term sustainability. You've got to get rid of these peaks and troughs because they just crap all over markets left, right, and center.
Today's episode of the Wealth Guide podcast is proudly sponsored by Ryker Capital. In a world full of financial uncertainties, Ryker Capital understand the importance of safeguarding your lifestyle and the well-being of your loved ones. That's why we're committed to providing you with personally tailored insurance plans and financial advice that aligns with your unique needs and goals. Ryker Capital is your guide in the complex world of superannuation and retirement planning. Our team of experts are dedicated to helping you navigate these complexities with ease and confidence. We're here to empower you with the knowledge and strategies you need to build wealth and secure your future. At Ryker Capital, we offer a comprehensive range of services designed to optimize your superannuation. We work closely with you to determine the best contribution strategy, regularly review your superannuation fund, set achievable financial goals. Our coaching and consulting services ensure your financial plan stays on track with regular reviews to adjust to your changing circumstances and aspirations. Don't leave your financial future to chance. Take control today with Ryker Capital. Contact us for an obligation-free discussion about your financial plan by calling us on 1300 179 537. Let us help you secure your finances because you deserve it. Ryker Capital, your trusted partner in financial success. The reality is that if you've purchased a home in the 10 years prior to that the first rate rise, you were yet to experience a rate rise. So you were living in an environment where rates only went down from a certain point. But having purchased at a higher interest rate, I won't say like 18 or 19. I think my first loan was about 7.5%, 8%, something like that. I know that rates have gone up and down, sort of thing. So I'm not accustomed to rates only going down. And I think if anything, people have adopted that mindset to our rates will only ever go down. And now they're in shock, if anything.
Exactly right. That's very problematic. Now, the reality is there's still probably 25 basis downward movement in rates. It's not going to happen this year. It'll happen, in my mind, the first half of next year and in the second quarter, more specifically. It's not going to happen inside of that. And I've been saying that for, handful, 6-8 weeks now, when we see the different data as it comes out. But it needs to level. It needs to stop. And that way, the housing market will improve. People's financial position, as their own personal financial position, will improve because they get used to a reality. And it's only getting used to. We spend what we get, right? I'm as bad as anybody else. I do that. So if all of a sudden I get used to not having, because my mortgage is $50 a month more, then I get used to it and I get past it. It's also got to be fair too. We can't have excessive interest rates, but it's got to be that realistic position that at some point in time has to play out. And I believe that will happen next year. And then hopefully we'll have a few years of calm. And I think that'll be good for everyone.
Yeah. How does this conversation play out in a financial planning perspective, Ray, particularly with clients when you start to talk about their mindset and behaviours around their spending patterns and their saving patterns as well?
It's pretty much like a yo-yo journey. I mean, like as the markets move, people's sentiments move, and you see a direct correlation between the budget, the savings, and because people, like Pete said, people get accustomed to their situation and to the savings, but it's very easy to go up on the spending habit, but very hard to sort of cut back.
Yeah.
Now, all of a sudden, what we're sort of finding them is people getting themselves in strife. They're sort of overspending, and then having to sort of have that realistic conversation with the client to go, well, look, if the mortgage is your priority here and you want to save a roof on your head, you really need to cut back.
Yeah.
And sometimes we can be very unpopular. It's like for them it feels like we're putting them on a diet, which we don't want to do. But I think there needs to be a realistic conversation around how to save and how to adjust to it.
I worked for a wealth management company at the time of the GFC, and I was doing some analysis on the level of people switching into and out of cash versus Australian shares, international shares. And the overwhelming majority of people switched out of those more aggressive investments in favor of cash. But logic would tell you that you should be buying more of a cheaper product during that time. So I think that's a massive part of, being a financial service professional is educating people and getting them not to act on their emotions, but a little bit more logic.
But that comes back to your 3 E's again. It's the experience that gives you that. Based on history, and this is how things tend to play out, versus the knee-jerk reaction.
I wanted to bring it back to technology, and we were talking a little bit about AI previously, but what around the innovation and technological advancements specifically that we're seeing in the finance sector that you find promising for the future of mortgage broking? How do you see those innovations playing out?
Yeah, I guess that's largely driving in the AI space. 12 months ago, I was very concerned what I was seeing because people didn't really understand it. I still have that concern a bit, is you get a lot of people talking as if they're an expert in AI, and they're going, you're not. Yeah. So you're somebody who's got a little bit of knowledge is a dangerous thing at times. So last year, not a couple of years ago, last year I was over in the US and I was at a large conference over there, and some of the US legends were talking about AI and how you use it and so on. And it's not Chat GPT. There's a whole series of different things that are better in certain areas than others. And they are leaps and bounds in front of anything that I was hearing in Australia. We sort of fast forward to today and everybody's talking about AI and it's in our phones, it's on your laptop, you can log in and do all sorts of wonderful things. Between you and me, I did my divorce through ChatGPT, referencing the Federal Court of Australia and the Family Law Courts in Queensland. Wow. Yeah, it was great. Saved me $12,000. Sidetrack, but it works. The thing that we're seeing now is that we think we're doing really well, like that things are progressing. Yet I've already got people out of the US saying, I can now do this. So what they're doing is a whole new education piece, and it's done in bite-sized absorptions. It's something we're going to utilize through the FBAA, and it's sort of like they're 5-minute segments, builds into a 30-minute short course sort of thing. But they've got it in 140 countries. So they recorded it in English, used AI to actually adapt it to, say, Mandarin, but change the mouth.
Yeah, I've seen that.
Wow.
Yeah. How do you do that? They actually change the mouth, so the mouth's talking in Mandarin, but he actually said it in English.
Even if they're lip reading and that sort of stuff.
Yeah, absolutely amazing. And then we talk about, look at Star Wars and the Princess Leia projection, the holographs and so on. They actually can do it now.
Yeah, wow.
Right? That's actually started on like what reminds me of an old projector, like the old box projectors.
Yeah.
So it's a bit big and clunky. It's a bit like the first mobile phone, sort of, but projected onto a table, and it was a hologram of that person.
Wow.
So the US is there now, right? We think we're heroes with what we're talking about today. They're already at that point, right?
Yeah.
So what is the next? We talk about human interaction with mortgage borrowers and so on. Is it done through holograms? In the future.
Almost
got a long way to
physically
go.
there.
Yeah.
Got a long way to go. Don't get me wrong.
Yeah.
But
maybe you can attend a divorce via hologram. That'd be better.
well, fortunately, you actually don't have to attend court anymore. So that's one step up, right? Yeah. So long as there's nothing contested. Not that. Yeah. Right. It's interesting how quickly things evolve. We started earlier talking about phones, and here are other pieces where we're saying, we're going to use that, and we're adapting a whole lot of stuff with AI into our business as well. That are things that have been done for a while, but not done to the degree they can be now because of. And those learnings and that growth and experiences that will happen from those technology pieces, I'd love to be here in 100 years' time. I'm obviously not going to be, but imagine where we'll be at then, because of that incremental snowballing effect of these things are already taking off, that are already advanced to this point, 5, 10, 15, 100 years.
Pete, do you have any... Sorry, I was just going to say, do you have any concerns, or does FBA have any concerns around the privacy of some of that data?
Look, I think we've all done a lot to shore up the walls. So there's always concerns. We know, and our ICT guy tells us all the time, we're getting attempted hacks all the day, but they never get through, right? So the walls are really tight in what we do. We've seen, though, that in some big companies it ain't that tight, right? So I think there's been, over the last 18 months, some really serious lessons learned. Let's hope so. And everybody adapts into that security protocols around their firewalls and so on to make sure that people's privacy is maintained and protected as best as can. But that may evolve too. So you turn around and say, well, you have to do actually you don't have to do 100 points of ID, but industry's still stuck in that run. But you give your passport, your driver's license, your Medicare card, your whatever. One day that'll go. Why? Biometrics.
Fingerprint.
Use somebody's eye or
iris.
Yeah, exactly right. Can't
Face
replicate
recognition.
that.
Yeah.
Better than anything else.
Yeah.
It's already started. Well, in the movies it has. I don't know, but you know what I mean. It's you have to say, well, and don't get me wrong. If we in saying that in the movies, and I'm a Star Trek fan, right? But the tablets they used in the first Star Trek movies are the tablets of today, right? The flip phones, mobile phones were in flip phones, and they still are. And these days, you actually can fold the screen in half. I can't understand that.
They say that the iPhones or the smartphones of today were the equivalent of what they had on space shuttles in the 70s or something like that.
Wow. Okay.
So you take all that in mind as to where the rest of this will spin to.
I think at the end of the day, regardless of the solution, the goal is always the same. So with any, like, it's the reason why we don't use typewriters anymore. You know, ultimately you want to spend less time doing those administrative compliance, and then you want to spend more time, you know, reinvesting that into a client value add or gaining more clients or building your business or something like that.
But also into your own lifestyle.
Yes, as well. Yeah.
It gives you more downtime as well. And we stress ourselves with the amount of work that we do. We've got to find those times where we can relax and chill. And unless we can find better ways to be more efficient in our workspace, it's never going to happen either.
However you choose to reinvest your time at the end of the day. Ultimately, I always say a solution set will provide you one of three things. It'll decrease the turnaround time, it'll decrease the touch time, or it'll give you a higher quality product. And then ultimately the customer will always benefit in all three cases. So I think that's important to note as well. We talked a little bit about how do you find that these developers will support brokers specifically?
I think for the reasons we're just talking about, it makes all your work a lot more efficient, a lot more effective. In actual fact, it actually makes your knowledge set at another higher level again. I mean, as individuals, you sort of absorb so much information, but you build in your AI, your tech, and you pull from a global resource, all of a sudden your knowledge is off the dial, and your capabilities to present something incrementally increase, and your time frame to do it, and it's done. Early days, my divorce papers took me 30 to 40 minutes to research, 10 seconds for damn cheap chat GPT to do it, and another 40 minutes for me to check to make sure it was right. We will get past that.
I think that's a good point. That's one of the inherent risks of using AI as well. I think I remember using ChatGPT, and I asked it to do something, and it has some statistics in there. And they said, can you check these statistics for me? Where did you get them from? And they said, these statistics aren't real. I just made them up for the sake of writing that paragraph for you. So look, I think there's still kinks to iron out with AI, but that's an inherent risk of using that tool.
And this is where I was at last year, because people were starting early days on ChatGPT, and we were looking at things going, doesn't make sense. It's all these Americanized spellings. Wait a second, what did you reference? Oh, you didn't? So it's pulled it out of American law or something like that, had all the language and spellings of an Americanisms, and it made no sense in Australia. So you have to be very specific, and that is the key to making those things work right. Otherwise, you wind up with a whole lot of garbage.
But I think even the brokerage firms who would be early adopters of some of the technology or at the forefront of it, they will really elevate their practice to another level. I think they're going to have such a seamless experience for their client with data sharing, where they're sort of working with a financial planning practice or a lawyer, personalizing advice, automating your routine tasks like we sort of talked about, predictive analytics on the data. I think that all will sort of play a huge part and sort of create a really fantastic customer experience.
And also open banking and consumer data rights and all those initiatives to enable the capability to transmit information, protecting someone's privacy, as long as I make sure they've got all set up. Those things help further to advance the experience for the borrower as well.
Peter, we've come to the end of our podcast. I really appreciate your time and insights. What's happening with yourself? What are your movements now, specifically with the FBAA? What have we got to look forward to for the rest of the year, I guess?
So I guess there's more things to talk about very shortly in regards to the education piece. We're a long way from finished what we're doing there. There'll be, hopefully before the end of financial year, we will launch something very unique that's never been done in this industry that will further support brokers we're talking about before and provide them with a much bigger voice than what they've ever had in the past. There's always something next. I can tell you now. Maybe I need to go for another motorbike ride and I'll think about that.
But I'm really looking forward to the conference Sydney next week, and obviously then the Gold Coast. I think that's going to be quite fantastic.
A couple of weeks out. Conference. Gold Coast Conference. We're at Royal Pines there, and it'll be a lot of fun. We've got some great speakers. There's some wonderful speakers in this country. It's great conversations, and will have a lot of fun at night time as well.
Ultimately, to the benefit of the FBAA members to, increase their education and financial literacy to pass on to their clients.
Most certainly, but we call it a national industry conference. It's open to anyone.
Yeah, awesome.
And obviously, members, get their benefits and so on, but we've always left it open for anyone who wants to come along.
Good to hear.
Thank you, Pete.
Thanks so much for your time.
Pleasure. Thank you.
Appreciate
Cheers.
it.
The information provided in this podcast is for general information purposes only and should not be considered as personal advice. Always consult with a qualified professional or expert in the relevant field for personalised advice tailored to your specific situation.
If you enjoy the content we bring you on the Wealth Guide podcast, we'd love for you to subscribe and share with your community. Let's grow this community together and make financial literacy accessible to all.